Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, November 25th, 2024. It's 10:17 a.m. Eastern Time. I'm starting the video. Just want a quick housekeeping note, and I'll try to post this before I leave, but obviously we have the holidays coming up. Going to leave town this year. Run over to Miami, do Thanksgiving with my family over there, my extended family, and then taking a vac from there, flying down to the British Virgin Islands and gonna island hop and doing one of those boat rental things where you rent a live on boat. So it's gonna keep me offline most of next week. Certainly from Thanksgiving on this week, be traveling. I have no idea what cell phone reception's like down there. I'll bring a laptop along, and I'll make a point between bar hopping down there and island hopping or whatever. I'll make a point to try to do some updates at the very least if I see something on my phone. Just wanted to mention that. So I'll be dark from this Thanksgiving, this Thursday, on to all of next week, throughout next week, coming back the following weekend. So wanted to just let me get everything out there. I think it's important to kind of note the levels. I'm going to show you where, what I do every day, kind of continue to highlight where I think the trading opportunities are. And as always, I'll try to differentiate between a setup and something that's actionable. So actionables, Treasury bonds finally make the turn. This is the 10-year yield. That's the most important bond to watch out there is the 10-year US Treasury bond. It determines mortgage rates. It's kind of a benchmark for interest rates and really borrowing costs for consumers. Remember, we don't borrow from the Fed funds rate. Banks use that rate. That's an overnight lending rate. So this is, we all know what happened. Fed cut rates. These little yellow hash lines here mark the two rate cuts. And so we saw rates go exactly in the opposite direction the Fed was hoping they would go. And but here we are now. And I've been harping on these as offering, objective long entries. This is the downtrend line on the 10-year right here, that yellow downtrend line, which we hit. And it's been a while. I've been harping on it since we hit it back here, and we've stayed on it, and we finally have that reversal. It's kind of like when I talk about back test of trend lines, when you break out on a trend line, a bullish, downtrend line's broken out, or an uptrend line on a bearish setup is broken. That the problem with that is sometimes you back test. So I like to see that rejection. So that's what happened here too. We broke down below there. Remember, yields and bonds go opposite one another. So this is bullish for bonds. And so this is finally this big gap away here today. Means that treasuries are finally moving. I told you that typically I'll trade the 30-year, and that's what I've been throwing out to you. I think the RR has been very good on treasury bonds, and as I've maintained, it's also an indirect hedge for those of you that might be short the equity markets in one fashion or another, whether it's an index fund or certain sectors or stocks that are highly correlated, like any of the big tech stocks. So this is TLT. You could even go like this, but I've given it to you on this is the daily chart here. Positive divergence on the daily time frame, and you don't get that often. So that was the last divergent low right here. There was a divergent high right here, divergent low, divergent high, and a divergent low right here. And we've been, I believe, highlighting all these long off the divergent lows, short off the divergent highs. And anyways, it's a trade idea, and it's finally triggered. That's the most important thing. That's why I'm doing the update. This is my 60-minute chart. That's a downtrend line I would have last given you, I believe, in the last video. And there's our gap up today. So we finally have gapped up. First stop's going to be here about $93. These are old targets from the last short when we shorted from off that divergent high. So now basically I'm looking as a trend change. So probably my guess is this will continue to play out until I get back. So I'm looking at a trade that's probably, and again, it's also a position. It's, you can move money if, 401k type stuff, maybe safe to put some back into bonds now if you're taking it out. If you heeded the warnings, the technicals said we're going to go down here despite everybody, well, not everybody, but most folks thinking rates were going to go down. Remember, this is bond prices. Bond prices went down because rates went up despite the Fed, and the charts told us otherwise. Charts told us not to go long, but to go short treasuries. And now Anyways, that's that. Things like home builders will benefit from rising rates, and that there's ITB up almost 5% today. That's the home construction index. And then we have those other trades that we have like Rocket and UWM. Remember, we hit that 4th target zone. Odds were very good for a reaction there. I think I stated that already. Good place to cover because we'll probably get a reaction. So we'll follow this bounce in Treasury, see how far it goes, and maybe look to re-enter. Again, depending on how you're trading it. Most of these trades, when I give targets that are measured down profit potential, 40, 50%, you're never going to go down in one fell swoop. So this is, I think, the last update I gave you. I showed us bouncing off T4, and now that gives us some fuel. I think goes without saying, but the reason that the home builders are rallying today, and companies like Rocket and UWM, these are mortgage companies, mortgage-related companies, and so that one hit T3. There's our bounce back to T2. If the bounce in treasuries is fleeting, then maybe that's all we get. But I think we could probably we will most likely carry higher. There's just a lot of pent-up demand for new mortgages and everything else. Home deals will start to get pushed forward again if that sticks. And the thing is, it's no guarantee. Sometimes the best-looking charts just don't play out. But that's it. I just wanted to say we've turned the corner on treasuries. It's a pretty clear rejection now of that downtrend line in yields, which is support on treasury bonds. And so these are the things that will probably go up, certainly going up today because of that. All right, let's move on to the next one. Gosh, where do I want to start? I'm just going to kind of randomly do this. Somebody asked me about HG. Okay, and these are copper index futures here. This nice divergent low back here. You had a nice rally off that divergent low, ended with a divergent high, followed by a drop into this divergent low. And then most recently, as you can see here, we had this nice bullish falling wedge breakout. So thank you to the subscriber that mentioned that. That was, I guess, on Friday's comment from one of Friday's posts, which I responded to and provided this chart. So we're coming off that divergent low, so far zigzagging higher, potential early makings of an uptrend, trend reversal, potentially. If it does go down and punches down through, it'll probably be, my guess, a marginal new and still divergent low. So you can keep that there. My comments were it should run right now. It's kind of in no man's land. We are off that divergent low. You could certainly take a starter position here, but you need to see it break above that 418-ish level right there. And then it should run. You can see my near-term price targets right there. And again, so, starter position here if you're so inclined. To the best of my knowledge, I don't think there's an ETN or ETF. There used to be CPER. Let's see if that's still trading. Oh, yeah, there it is. All right, so you could go with that one there. Let's see how it looks on the 60-minute chart. I guess I was highlighting that island cluster top back there. Yeah, similar chart. So there's a trade idea for you. Let's talk. Well, yeah, let me jump into the semis, and then I'll get to crypto, and then I think that'll be it for now. We'll wrap it up. Okay, so as far as semis, let me just start with SMCI because that's hit that T2 I gave you. Remember, I threw it out back here. I gave a suggested stop for those that that some folks like these suggested stops based on where we went long, which was right here, and calculated on a favorable R. That was nice support back there. And just spent 2 days down below there and then reversed with an island reversal bottom, by the way, guys. It's you have 2 candlesticks here. I always talk about the island cluster tops. That's an island cluster bottom right there. 2 candles separated by gaps on both sides. We went up, so anyone that might have given it a little bit more room on stops. It hit the first target the other day, last week, and now T2, which is really good resistance. Remember, that was the final target. This was our short trade from here all the way down to T2. We had our final target there, and then reversed it, and so went a little bit lower, undercut support for, like I said, a couple days. But this is big resistance, and a great place to take book profits, in my opinion, or at the very least tighten up stops, or turn around if you want to take a shot, probably get a reflexive, some profit taken here, pullback trade. I bet you could make double digit. Set a stop above today's highs right there. Today's high is so far 39.23 because it already hit the resistance. If it's going to reverse, it should do it now. And then, you can go backwards like this. Those targets were resistance on the way up, then they become support. Or you could also do a runner trade, let it run. This is trend indicator is bearish. We're below that zero line. What I'm talking about here, the PPO. I'm trying to keep clicking on one tool. I keep getting that silly yellow freehand drawing tool. There it is. So this is a trend indicator here, right there. Actually, it's been bearish this whole time since we were short that thing on the way down. And you want to be long and strong when the PPO is above the zero line. That denotes a bullish trend. So we're still clearly in a bearish trend. Anyway, that's that. If it runs up, your next resistance is right here. If you're looking for a target, there's a big old gap to be backfilled here if it wants to do it. But again, that, being what's the final target on the last trade, probably get some sellers stepping in here. Its partner, or the big boy it follows, is NVIDIA, or was following. These two were in close lockstep before. Supposedly, I remember reading that the CEO of the two CEOs, NVIDIA's and SMCI's, were chummy with each other. And NVIDIA is, that's why I wanted to go into the semis on that trend line right now. You guys know how important I think this trend line is. So we are at a critical level. I'd like to see this go before I leave town, but we'll see. Also keep in mind everything you take with a little bit of a grain of salt this week, because it is Thanksgiving week. It's, even though Thanksgiving's not till Thursday, you get the holiday week. It's trading volumes drop off. A lot of traders on vacation. So you have to take breakouts and breakdowns with a grain of salt. Doesn't mean you can't take them. I'm just telling you that you have a higher chance of seeing whipsaws on Thanksgiving week, just like, between Christmas Eve, the week of Christmas and New Year's, you get those, holiday weeks. But on the flip side, breakdown is a breakdown unless it fails. So if you break down here on NVIDIA, my long-term targets. I've given those to you back all the way back in late June. When we were right here, and that's still where we are right now, at that same level. We went a hair higher, just extended that divergence, and this is still my current final target, T4, down around $40. So big. Remember, we already hit T1, so if we do break the trend line, this is the uptrend line right here on the weekly chart. Probably get another reaction at T1, but I wouldn't, it's not where I'd go long position for a multi-week or multi-month bounce, more like a bounce probably lasting a few days to maybe a week or so, and then go on down to my next target, because T1 was already hit back here. We already checked it. So that kind of opens the door for the next time around. Little, if any, reaction compared to that first tag. It's T2, T3, T4. And again, maybe that happens, maybe it doesn't. But the one, I give few guarantees in this thing we call trading, this game of trading. One guarantee I'll all but give you is that if NVIDIA comes anywhere near these deeper targets, especially if it gets down even at my next T2 level, it's taken the stock market down with it. I've read, you've read, heard, I believe, I have no doubt this market is all about AI. This is the poster child of AI. And if it hits my second target, it's going to drop from where it is today, 45%. So it'll be about a 50% drop off the highs. And if you don't believe AI is everything the market cares about right now, well, all you have to know is NVIDIA is the top weighted stock. It's the largest out there. It's a $3.6 trillion company, and its mathematical weighting on the indexes will pull them down. So that's that. Biggest thing to watch. And again, if I'm around, if and when we get a breakdown, I'll comment on how it looks. But you have the setup, so do with it as you want. Then there's other semis. They have what was the one I gave you last week? SIMO. There's some bullish looking ones out there. SIMO continues to run, broke out the day of or the day after I gave it to you right there, Thursday. And nothing big so far, but into today's highs up about 5%, and it's taken out that 55, 70-ish. What was my first R1 means first resistance. Again, it was too small to label T1. That's just for me not enough juice. I don't want to risk, we don't go into a semiconductor stock to make 3%. I want to make high single, if not double digits. So, and on that, by the way, I'm driving with one foot on the gas, one on the brake on this one. In fact, I actually just for other reasons, just lightening up before I go on vacation. Even though I'm going to put OCO orders when I leave, whatever I still have. OCO means one cancels the other. Best thing since sliced bread. It just says if you have a position. Let me change my tool here to an ellipse. OCOs, one cancels the other. You have just put a C in there. Or sometimes they call them OCA, one cancels another. And it's simple. You have a stop loss on your trade and then your price target or targets, whatever that is. So let's say on this one you were going for, let's say you're going for T3. That's where you have a sell limit order, good to cancel, and then a stop loss order, good to cancel. So if I am sailing the Caribbean a week from now, cruising around, and this thing does this, then I don't have to worry about it continuing to drop. But if it happens to pop up, run up there and hit, then I'm out. So anywho, so I just wanted to say it looks good. One of the better looking semis. Also, as I mentioned with this trade, another way to indirectly hedge. If you're short the semi sectors, which has been a trade I've been harping on, SOXX, which is currently back testing the trend line. So you have right now, and this is why I do these long-winded videos. There's just so much to note. So you have NVDA testing its key uptrend line. SOXX currently back testing the primary uptrend line right now, and if it happens to regain it, remember it's Thanksgiving week, so I wouldn't be surprised any whipsaws. You have a downtrend line right there, so you're really coming in here. We're getting close to the apex of this triangle pattern. So that's that. And again, everything to me, and it's funny because you look here, I'm going to show you, this is what SOXX looks like, all the components. If you have, if you're watching on a computer, you can probably see this. NVIDIA is down 3.7%. Now it's on the trend line. I always say support is support until it's broken. Taiwan Semi, the second largest, is also down 3.2, but most of the semis are green today. So for whatever that means, usually you see a higher correlation between, especially when the leaders are down. Let's look at Taiwan Semi. Oh yeah, Taiwan Semi, the second largest in SOXX, is has I highlighted this recently, broke down, put in a divergent high, just like we did back here. We got a short trade, we covered everything, all these semis, and SOXX itself in the market on August 5th. That was a key low, and we rallied back up and put in a larger divergent high, and we had a breakdown here, the uptrend line, back test, and this one's rolling over. So you have NVIDIA and Taiwan Semi. Taiwan Semi already on a sell signal, NVIDIA very, very close. And again, support is support unless broken. If you are bullish NVIDIA, then what you have, there's only one trade to be made right now. Buy the stock with a stop below. Or the other trade is wait, if you're bearish, for a breakdown. Get a solid intraday break, that's good. Solid daily close, even better. And a solid weekly close, that's where these targets, and that's where this, if you're trading the long game here, a trend trade, that's what matters here. If NVIDIA closes below this primary uptrend line on a weekly closing basis. So there it is, guys. I cannot impress the importance, in my opinion, of this stock and this trend line, and trying to get these sell signals here if we get it. Oh, and then looping back to that other SIMO trade, that at that point, NVIDIA cracks, semis are going down, and they're probably going to bring everything down with it. Now, obviously, SIMO and a couple other charts look better, much better than others. But at that point, me personally, I'd probably just throw it away, book profits on it. Like I said, I already took partial today. I just sold off a third because I had a pretty hefty chunk. And now we're heading into Thanksgiving week. And I just always like to lighten up the week of Thanksgiving, even if I'm not leaving town, which I am this time. What else for you? It's natural gas. That one's been trading very well. We have UNG. Remember, I had this long-term downtrend line here, and then this secondary downtrend line right here. Or this is the primary one. Back testing that, although I put up not a super high weighting because it's UNG over time, kind of moves around. But right here, I think in the last video I gave you on Friday, I first highlighted a pullback to this trend line, and then even better, really nice price support. All these highs right here, and then we broke out and back tested, and then boom, pop right back up. So like I said, I've been maintaining the longer term charts, what kind of helps drive when do you want to hold tight or re-enter. But as I told you last week, it was suggested to take profits there. I told you that's what I did, and then recycle back in on a pullback, and that's what we got. So when you do that, if you're able to do it, successfully, That's a how do you want to say it? You can call it an 18% plus addition to the 25 or something percent gain because as mentioned in my trading account, I shorted a little bit there and gained the bulk of the pullback and then reverse back in. So, by sidestepping, even if you just sidestep a 9% get back or a good part of it, that's you're ahead right there, and then you buy back in lower. But if you can turn around and short it, capitalize on the pullback, and then turn around and go long again, then again, you're just boosting that. And it doesn't always work, but that's, it's every trade. You can't ever say any trade's going to work. You just do it tactically and strategically, and look at when things get frothy and they're at resist. Again, it was better. Here, I'll show you the nat gas future. And remember, as I told you, we rolled last week from the previous November contract into the December. And so that was it. We had that divergent high, negative divergence at the high, and pulled back, and that's it. So there's the pullback right to the trend line, pop back up, and now we just need to punch through that high and then turn my focus to the longer term charts. And this is what it looks like here. And that was the reason, again, for booking profits. That was big resistance right there. You can see all these reactions right there. And we're pushing on it right now. That was just what I call momentum fueled overshoot, a brief spike there. Never even close it. That's just a skinny part of the candle called the wick up top, the upper shadow. And so that means this is where we parked. Had the pullback. A lot of sellers saw what we saw, sold, but then boom, got right back in, and boom, now we just need to pop that level, and that's going to be very bullish in my opinion if we can clearly get up in there and then open the door for that move up to, what is it, $5 I think I'm calling for the futures, and we're only at 339 right now, so 340. And that's about it. Let me see what else I have for you. I had two price alerts today. One was, I got it out to you, that MSTR. Again, I made very clear in there that's, look, it's already, there's a little whipsaw so far, but, I've shot it out as a trade idea. Just set your stops in line with what you're targeting. T1, the first target is the trend line. This is a level, as I said in there, this is where I will almost certainly, if and when this stock gets there, cover and reverse T3. It's really good support. It was this trading range here, and then maybe we get a bounce. We'll see what Bitcoin looks like then. It's just a very, 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 very overloved, overowned trade. Nobody thinks it can go down. Everybody thinks it's going to go up because Trump is pro crypto, and it's just a crowded trade. And again, like I said in there, on both Bitcoin and MSTR, that looks like a buying climax, big bearish engulfing candle. So a stop on this, a reasonable stop, is above that recent high. But every time you see a bearish engulfing candle, you can short after that with a stop above there, because a bearish engulfing is a potential topping stick. And if you go above it, then that wasn't the top. So, you have minimal. Now, when I say minimal upside, it's big in percentage terms, but so is the profit potential. If we get down there, to even T3 alone is about a 55% drop, and then T4 is 75% or so, and that'll be depending on what Bitcoin does. And I already got those charts out to you today. The sell signal is there, and I will once again all but promise you that if my Bitcoin trade plays out, that this one's going to go down with it. This is obviously very correlated to crypto. And then the other ones too, if you want any individual ones, like some of the other ones, I have a whole watch list of crypto ones, various crypto related companies, but this is the one I'll focus on now. Okay, why don't we wrap it up here? Keep it relatively short. We're just under 24 minutes. If there's anything else you want, updates on any existing trade, anything else you're watching, I will be around this week through plan to hit the road on Thursday, and I'll be checking in and out. I kind of prepare leaving town, so I'll not be posting a whole lot before then. But if you want updates on anything or second opinion on something, just post it in the comment section. I'll get back to you as soon as possible. This has been Randy Finney with Right Side of the Chart. Have a great day, and happy Thanksgiving too.